All right, good afternoon. There we go. It is 3:30 and we are getting started. I appreciate you guys taking the time today to listen in on our webinar, and just wanted to give you a couple of friendly reminders. I do have all of you on mute as of right now, and we will be taking Q&A at the end of the session. And so please write down your questions. I'd be happy to answer any of those questions as we move forward. And the other friendly reminder, is we are recording this call just because there are several people that had asked us to record it so that they could listen to it later. That also gives you the opportunity to listen to it for a second time. You're going to get a lot of information thrown at you today. And so after this call, within 24 hours, we will send out the link to this Zoom meeting, the webinar, and the recording so that you guys have everything at your fingertips. All right, so I'm going to begin by giving you some really friendly reminders. And I know this process has not always been the smoothest for all of us, but what I'm going to remind you of right now is that this process, even in forgiveness, is going to be surrounding yourself around the word patience. And it's because we're going to cover a lot of information today. However, I do know for certain it's not the final guidance. And so what we're going to walk through today is the foundation of what forgiveness is going to look like beginning in July. It's going to give you some ideas on how to plan for that forgiveness, what documents are needed. However, again, there are still some holes, and those holes we'll talk about. And we're being told that within the next week, we should have final guidance on forgiveness and what that'll look like. So my gut tells me that we may be having one more webinar in June that goes through the final forgiveness. That's going to be able to help you to bring it all together. And then beginning in July, you're going to start submitting your applications for forgiveness. There's been a lot of questions around the EIDL loan and how that's going to impact your total loan amount. So I'm just going to get that out of the way right away. So if you received an EIDL loan of $10,000 or less, the forgivable one, not the one that's on loan payments, but if you have in your hands or in your checking account right now an EIDL loan for that $10,000 or less, that will actually reduce your total loan amount as far as forgiveness is concerned, because that was a grant. It's a forgivable loan, and the PPP also complements that, and so that is something that was provided as guidance. Now, if you got the loan that's actually a loan, then you have nothing to be concerned about, and it does not impact your PPP loan. So I just wanted to throw that out there because there's been lots and lots of questions about that. So what are we going to talk about today? We're going to talk about your responsibilities, and I highlight the most important ones that we're going to talk about. We're going to talk about how you submit your documentation to us as a lender. We're going to talk about providing an accurate calculation, what that means. We're going to talk through your testaments. What are you testifying to when you submit that application of forgiveness? And lastly, I just want to remind you that these loans can be audited for up to 6 years for accuracy. So the SBA recommends that both the lender and the business, you, keep your records for up to 6 years on everything you've done. So you may have information that you didn't provide to us as you were trying to calculate your loan amount or your forgiveness in regards to that. You're going to want to just keep that. Just put it in a folder, put it in your vault, and keep it for 6 years. All right. Forgiveness of payroll costs. So something has changed, and actually I think it's changed for the better. The thing that has changed is you now have two options when you're calculating your forgiveness. You have the option of calculating the 8 weeks from the date you received the disbursement, or you have the option of calculating that from the first day of your first payroll cycle within that covered period. And in the forgiveness application, that's called the alternative payroll coverage period. And so that's really important for you to remember, because I know I've had many conversations with all of you asking about the covered period. Well, my payroll didn't cut this week and you gave me the money. That's okay now. The SBA actually changed that for the better. And so when you go through to apply for application, if your payroll didn't cut the day or the week that you receive your PPP loan funds, you actually can stretch it out slightly, use that first payroll period, and then go through that 8 weeks from there. So that's good news for all of you, I think. Timing. So from a timing standpoint, what is it to be expected? You and I talked about this at the very beginning, or you and your lender did, that at the end of all of this, you're going to receive this application. You're going to fill this application out and you're going to submit it to us as the lender. So the responsibility on you is to fill it out and get the information together, just like you did at the very beginning. You're going to submit that package to us sometime in July or August. When you submit that package, we as Falcon National Bank have 60 days. We have 60 days to review it. We have 60 days to go back to you if we have questions about what you're looking for. And then we have 60 days to make that recommendation. So all in that 60 days, we have to pull it together, we have to underwrite it, we have to review it, and then we have to approve it. So the bank makes that approval and recommendation to the SBA. We then submit that package to the SBA, indicating that to them what we're recommending for approval. They review it, and within 90 days, you will receive your final approval and you will receive the funds. Well, technically the bank will, but we'll receive the funds and we'll actually reduce your forgiveness amount that's owed in that timeline. So that's why I say patience is what we're talking about a lot throughout this presentation, because from July, we're going to have 60 days to get everything put together and submit it to the SBA, and then the SBA is going to have 90 days. So you're probably looking out within that full 6 months of carrying that money. Again, that's at no expense to you, as long as the full amount is forgiven, and SBA pays all of the interest and everything on that forgiveness amount. And then after 6 months, if there's a balance, that rolls into your future payments. All right. So we're going to start talking about the application now, and I broke it out, and then at the very end, we're going to walk through the application so you can see it and understand kind of where we're coming from. So we've already started, our team has started putting together a forgiveness packet. Some of you may have already received it because we started at the very first that got approved and closed, and then we've been working our way down. That forgiveness packet is going to be mailed to you. There's going to be a few things in it, okay? So along the way, we've learned some things too from the SBA about their expectations. We've learned that they do not accept anything outside of DocuSign application or wet signatures. So for some of you that sent us applications that were wet sign scanned, we actually have to send that application back to you. We've retyped it, and we're asking you to re-sign it so that we have a valid application in file. The other thing that our team is doing is we're filling out the top portion of the forgiveness application for you, which we believe is really going to help you. And because many of you may not know your SBA loan number, your lender loan number, et cetera. So we're going to take your original application and we're going to fill all of this out for you and then mail it to you. You'll receive that. We ask then that you utilize that along with certifying the documents we need, and then bringing all of that in or mailing it to us when you're ready to be able to form that application. If you're using an outside payroll provider or an outside agent to help you to package this for you, that's okay. Just let them know that we have filled out the top portion. If they need it, great. If not, they can do it through Adobe or the computer, however they want to do it, and then we can DocuSign those signatures later. However, we do need you still to take care of the beginning part of that, the application piece. So if there's anything in that file where we're asking you to re-sign, whether you're using an outside party or not, we need you to still re-sign that and get it back to the bank as an original wet signature, please. So there's 4 parts. So you've got the calculation, you've got the Section A and the worksheet, and then you have an optional form if you decide to fill it out. So we're going to walk through each of those today. I'm recommending that you start on page 5, and you'll understand why as we get into it, because the Section A flows into the worksheet, which then allows you to help complete your calculator form. And so it's just going to be an easier kind of role for you. So some of the questions that many of you have been asking is, have things changed? What is expected? What is forgiven? So here's a few things to keep in mind. It's $100,000 max per year of cash compensation. Cash compensation does include payroll costs, including salary, wages, commissions, and similar, payments to furloughed employees. So some of you aren't open and you're still paying your employees as if you are open. That's what we would consider a furloughed employee. That's okay, 100% forgivable if it's a payroll cost. And then you're also hazard pay and bonuses. So for some of you, you may be paying your people more because they're on the front line and they're working hard and they're putting their lives at risk. Cliche, I put that in quotes, lives at risk, because I don't really know if they are or not, but some think they are. You may be paying them hazard pay and you also may be bonusing them. That's okay. You can do that. And that's a part of, again, cash compensation. Continuing into cash compensation, a lot of you self-employed and sole owners, Schedule C filers have had these questions, and so I just wanted to get these off the table and lay it out for you. So loan forgiveness for somebody that is a self-employed, a contractor, or an owner-operator, the max you can collect is $15,385. That is your cap for cash compensation. Schedule C filers are all 100% capped at their 2019 net profit. So there's not a whole lot for you to be concerned about if you're a Schedule C filer because it's already determined for you. General partners are capped also at their 2019 net earnings for self-employment. And there is no additional forgiveness given if you are self-employed, a sole proprietor, or a contractor outside of that net earnings. So keep that in mind, and I think we've talked about that. Unless you have other employees, you yourself personally are capped at that $15,385. If you have other employees, that's where then you would peel those in and allow yourself to be able to have forgiveness for those people, just not yourself, because you're capped at your net income. All right, and then salary and hourly wage reductions. So this is where at the very beginning there were two things we talked about just being cognizant of. One was when you filled out your application, you put your FTEs that you had, and you indicated how many FTEs you had at the time of calculating that. So it may have been in 2019, it may have been a different 12-month average. The goal of the SBA was to get you back to that number, okay? So the key here is realizing, did I get back to that number or did I get close to that number? So that is one way where you're going to look, and we'll show you here at the very end, where you're going to calculate, is there an impact or isn't there? The other thing that you're going to do is complete the wage reduction column. The wage reduction column looks at 25%. So what you're going to do is you're going to look at the wages of that you were originally approved for versus the wages you paid out. And if it was reduced by more than 25%, your forgiveness is going to be slightly smaller. And that calculator shows you exactly how to back into that. Now, there is something kind of neat about all of this. They're giving you until the end of June to get back to where you were, because the government indicated that they understand that some businesses have been closed. Some furloughed employees may not have wanted to come off of unemployment. We're going to talk about that later. But they're looking at it as, and that's why you don't want to fill this application out until July. You're filling that out as of the month of June. And that's going to help you to give you some time if you're sitting here saying, I'm a little worried about that. This gives you some time to get those people back on payroll so that you can count them as an FTE and get yourself back in alignment so you can maximize your forgiveness. Okay, so June 30th is your goal date to get all of this up and going. So what documentations do you need to supply? This is super important, okay? So just like at the beginning, we're asking you, and the SBA is asking you to prove why you think your numbers are the way they are. So for payroll, okay, to calculate payroll and get forgiven for your payroll costs, you can utilize bank statements. You can utilize third-party payroll providers. You can utilize your 941 for your payroll tax form. And this is a really nice resource, and that's also why they're looking at the month of July, because by the end of June, you should be able to supply your 941 for second quarter. And so that's typically a really nice indicator, an easy way for you to be able to submit your number of employees, your hours, and your wages. So it's a slick way to do it. If you can get a 941, that'd be great. You also can submit it through your quarterly business and individual employee wage report, your unemployment insurance tax report, or worst case scenario, receipts, canceled checks, or account statements documenting the employer contributions for health insurance and retirement plans. So again, it's document, 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 and we're going to have to certify those documents. So if you would like to only talk to us once about this program and getting forgiveness, please try. If you're coming up with a number on that calculator, make sure you have a reciprocating document that proves how you came up with that number. That will help all of us to have this be a smooth flowing process. So here we talk about FTEs and documenting that FTE. So they gave you actually 3 ways to do this. So it's not a one-size-fits-all, and they're allowing you to decide how you want to come up with your FTE count. So the first option is you can take the average numbers of FTE employees that you've employed between February 15th of 19 and June 30th of 19. Okay, you can take that period and compare it against this next period for your forgiveness. You can also take your average number of FTEs employed between January 2020 and February 2020, or if you're a seasonal worker, you can also do it this way. And so they break it out as this way or this way. Seasonal can do it this way, okay? And all of this is in the application. It's straight from the application. And again, you'll get this PowerPoint too at the very end. All right, so here's where we've had lots of conversations, and so I just want to talk about this, and if we haven't, then I want you to think about this. So if you rehire, well, that's interesting, it just had a blue mark, I apologize for that. So if you rehire employees and restore salary and wage levels by June 30th, 2020, okay, so they're giving you that June 30th, 2020 option to be able to get to your employee count so that you can maximize your forgiveness. And I also gave you an example, okay, because it's based on percentage. So let's say you couldn't get there. Let's say that originally you had 10 FTEs, and during the covered period, which we just talked about, you get to choose your covered period, you could only get up to 8 FTEs. So you had a 20% decline. So what does that mean for you? That means that only 80% of the loan is forgiven. And the reason they're doing that is because technically you should have 20% of that money left over where you can take that money and put it back against the loan, and then you don't have a loan. Because your FTE count went down, your average payroll per FTE went down, and so therefore you should have money left over. If you don't have money left over, they're saying that's okay, you decided to bonus out these people to a level above and beyond, on average, what they were paid last year. We understand, but then you're going to have a small loan for that at 1% over 1 year and 6 months. Now, if an employee is fired, you can still count them into your employee count. So if they are fired, it does not hurt you as a business owner. You can still do that. That's interesting. I don't know why it's doing that. All right. So non-payroll costs are eligible for forgiveness if mortgage interest payments, so non-payroll costs and forgiveness. We're talking about mortgage interest payments, a copy of the lender's amortization schedule, and receipt or canceled checks verifying eligible payments. So again, proving mortgage interest. There is a small gap here that we're not exactly sure how to do with, or at this point being given guidance on. I'm going to change here and put you guys on a different role here. I'm going to see if that gets rid of that line. I apologize, but that's driving me nuts. There we go. All right, so back at it. So where the hole is right now, and we're waiting on additional guidances, it actually says in the rules, if you read them, that you can actually get reimbursement for any secured loan. It doesn't specify mortgage. And so the way that it's being read right now, our advisors are telling us that they believe, again, this is not in stone yet, but the advisors that we're hearing from, Nagel and other sophisticated lenders, are telling us that they believe that you as a business owner actually can have forgiveness on interest payments on any of your secured business loans. Now, that is something I will follow up with later, but for right now, we are following what is stated in the actual application, which states mortgage, okay? Rent and lease payments. This one technicality is also being researched. If you own the business and you own the building in two different companies, okay, and you're paying rent for more than, maybe it's a triple net lease, whatever it is. So what they're researching is, with the SBA and Treasury, is can you have 100% forgiveness on your lease payment if it's higher than your mortgage payment, or can you deduct both? Don't know. That's what we're looking into, and we're waiting for guidance on. And then utilities, and utility payments absolutely are also covered, and you just have to have copies of invoices. So again, document, document, document. All right, so the Schedule A worksheet. So the Schedule A worksheet is broken out in the following ways. So, and that's where we're going to get to it at the end, but you're going to want to start at the very top of the Schedule A worksheet and work your way down. You're going to calculate your hourly reduction. Then you're going to calculate out the employee's wages, and this includes, again, you can't pay anyone on average more than $100,000 per year. You're going to have documentation regarding people that refuse to come back to work. So this is really important for you not to be penalized for your employees basically saying to you, I don't want to come back to work. You have to actually get a written letter, okay, and you have to have them sign that letter indicating that they're refusing to come back to work even though you offered them employment. On a side note, and it doesn't say this in the rules, but it would tell me that they should be notifying the unemployment office because they shouldn't be collecting unemployment if you're offering to bring them back to work. So that will not count against your FTE count if you have that letter. You can include that person. If you have a firing, we talked about this earlier, or a voluntary resignation, you have to have a written letter for that firing or the voluntary resignation indicating that those people were in fact fired or they voluntarily resigned because of maybe health or whatever it might be. And that's the documentation then that's going to support your reduction in safe harbor and how you can maximize your forgiveness. So at this point, I'm going to pull up the application, and some of you have seen it, some of you may not have. I just want to make sure, I'm just going to double check, make sure you guys can see it. It looks like you can. And I'm just going to walk through it with you so that it's not the first time you see it when you get it from me, okay, or from Falcon National Bank. So the first page breaks out a lot of what we talked about today. And actually a lot of it I literally just pulled into this PowerPoint so that you'd have it all in one area. So you're going to see that alternative period that we talked about where it's the first payroll cut through. Another thing that I didn't mention that I think you would also like to know is many of you have talked about, okay, so my 8 weeks is up next Friday, but I have accrued payroll coming. The SBA actually says, and if you read that, it says it in here, that's okay. You can actually count that next payroll in as long as it was being accrued during this 8-week period. So that's another way for you to maximize your payroll discount is if you started on your covered, if you didn't start on your covered period for the alternative. So let's say we gave you the money on June 1st, okay, and your first payroll cut on June 10th. That's 9 days of lagging. You can pick up that extra 9 days at the end of your 8 weeks if you need to and be able to have that covered. And again, that talks about that in here. The other thing I want to notate is, and we talked about the 6 years and keeping your files, the SBA is probably not going to do an extensive review during their 90 days. We're going to rely on the bank to be able to look at that information and to make a valid recommendation. However, they are no longer only focusing on loans over $2 million. So you're going to want to, if I were you, you're going to want to at home or at work in your package that you're going to save for the next 6 years, jot down the reasons why you applied for the PPP loan. Jot down the reasons of why COVID impacted you. That's going to help you if in the future you're ever audited to be able to say, yes, I did take out this loan. Here's how COVID impacted my business, and that's why I applied for it. So it just covers your bases. It also takes you through the application, what it looks like, and all of the different descriptions. So again, this is basically copied and pasted what's eligible for payroll forgiveness, non-payroll forgiveness. So you're going to see, so this is step 3, okay, is the application. If you follow my recommendations, you'll actually jump from here and go to step 3, which is your PPP Schedule A, okay? The Schedule A is how you're going to calculate if you get full reimbursement or forgiveness on that money. So you're going to take your Schedule A worksheet, which is through here. So you're going to start here, and you're going to figure out your hourly wages. You're going to look at prior FTEs, and you're going to back into, did I use 75% of this money for payroll? Yes, I did. Okay, so that means, you know, I'm maximizing my benefits. So that is your first step, page 7 and page 8. Those numbers that you're going to go, and again, it's step by step, it tells you exactly how to do it, are then going to flow through here and tell you if you met your minimum amount. So you're going to work through all of the different costs you spent the money on, or the ways you spent the money on. In the very end, you're going to go to your application, which is right here. And in your application, you're going to take all of the numbers that you put together from your Schedule A, and you're going to put them in here. Then you're going to figure out from your Schedule A, your employee wage deductions, if there were any, because you weren't able to get your FTE count up to where it should have been. Then, and again, that calculator calculates all of that for you. Then you're going to look at the potential forgiveness amounts. And that's where these are, again, adding up and pulling in your PPP loan amount, which we're going to fill in for you at the top of the application. You're going to take that times 75%. You get to then take the smallest number out of these 3. The smallest number out of these 3 is your forgiveness amount, okay? So follow it step by step. Start with your worksheet, build into your Schedule A, and then move it into your loan application, and you'll be just fine, and you'll get there for sure. So that is the application as a first round, so that you guys had an opportunity to see that. So I'm excited we got to walk through that. And now I'm going to open it up for questions. I know there have been some questions that are in here. What I'm going to do is I'm going to run through quick the questions that are in the chat, and then I'm going to unmute the line so that everyone has a chance to kind of ask their questions. So the first question, and again, there may be ones where I'm going to have to do some research. So if that happens, I will write them down, and I will assure you that we will follow up. So question number 1 from Matt Foster. Can we prorate payroll? Oh, there's more coming in, so it's bumping me here. Let me make it big. There we go. Can we prorate payroll and rent for 8 weeks? You cannot prorate. You have to do an actual and accrued. So you actually have to prove, number 1, that it was due, that you paid it, right? You're going to show the check or the payroll ledger. For rent, you're going to show a proof of check. And then accrued, you can actually accrued. So like if you started this process in mid-April and you wanted to pay half of April, May, half of June, you can do that, okay? So you can do that. But it wouldn't technically be, I guess, in a way, it depends on how you look at it, but you're going to want to make sure you document it so that you can prove that it was in fact an accrued cost, not something else. The next question, is this 60 and 90 days in total a 5-month process? So it's going to be from the moment you get it to us, the lender has 2 months, and the SBA, yes, does have 3 months, so it's 5 months in total. So that's why the word of the day is patience. It's 5 months in total before your loan will be paid down or paid off by the SBA. Worst case, right? Worst case, it's 5 months. Are you interpreting owner-employee as owner-employees of an S-Corp? Interpreting owner-employees. I don't, so Sally, you might have to ask that one over the phone at the end because I'm not sure what that question means. yes, fired doesn't technically mean resigned, but voluntarily leave is resigned. And so you would just want to document if you have an employee that resigned from their position that they resigned and that was out of your control. And again, in the PowerPoint it talked about, you're just going to want to have that written for an explanation, and then you would count them as an FTE. Correct. So the question is, the app asks for number of jobs, not FTEs. So it depends on where you're looking at in the application. The application does actually give an explanation of what an FTE is based on the job. So, you're going to want to think of it as full-time equivalent employees. One full-time equivalent employees is 40 hours. So if you have multiple part-time that equivalent to 40 hours, then you're going to have that. Another idea that NAGLE gave to us in the last 24 hours was, you could also give, and actually a part of this application, let me show you this. So a part of the application actually does have a place where you're going to fill out your employees' names. I apologize, I didn't show you this. So you're actually going to do a schedule that shows all of the employees that you have on payroll, and it's going to help you to be able to calculate the employee reduction compensation and average FTE. So this format is going to help you to get there, and you can always add additional boxes if you need to. So that's a really nice way of doing it. All right. So the next question is, I have all part-time employees. No, that does not by any means mean no forgiveness. What that means is you've got to just equivalent it. So if you ran with all part-time employees at the beginning when you calculated your FTEs on your application, you're gonna want to be consistent in how you figured that out. So if you said at the very beginning, I have 4 FTEs, and you have the same number of 4 FTEs at the end, to you, if you said 4 before and they were part-time, I personally would be consistent and then write a letter of explanation proving that. Or your payroll will show that based on hours worked. There's ways to back into that so that you can prove that that you have the same number of employees, whether at the beginning you put the right number or not. It's all about telling the story to show that you, in fact, did get your people up to that level. Can you use funds for other business expenses? The other business expenses is forgivable. Actually, the non-payroll expenses are forgivable, and you would actually include those in the application here, and I'm trying to find it. It's in the first page on the application. So this is where you would add your mortgage, interest, rent, lease, and utilities. Non-payroll are all included in your total forgiveness. So yes, those are included in your total forgiveness. We talked about laid off employees. I have to move to my home office during COVID time period. Could I use interest on my home mortgage for forgiveness purposes? If you are counting it as a lease expense, I think, and you've got to have a lease in place, I think you could probably attempt to do that, but you're going to want to have it very well documented and tell the story, right? It's all about telling the story. If an employee refuses to sign the letter, I would just notate that, and I would do your best effort to tell that story, because that's not on you, that's on them. And technically, in a way, they're kind of breaching their rights by not signing that letter if you're still their employer after this. But that's on you on how you want to handle that. Tuition assistance, as long as it's included as a benefit to the employee and you can document it, that's included in payroll costs. All right, we've got 3 more here. All right, so if the payroll costs are more than the original PPP loan, is the PPP loan forgiven if we meet FTEs? Yes, it is. And you'll see that when you go through the calculator. Because your loan amount will be less than your actual other modified calculators, so that's going to mean that you're fully forgiven for that loan. My actual payroll spend would be higher than PPP loan forgiveness, so yes, again, a couple of you are in a position where you've got smaller loan amounts. than what you ended up using, you're okay. That's fully forgivable. All right, so what I'm going to do is I'm going to actually open this up, and because you guys are all kind of, I think it's kind of getting boring for me just to talk. So I am going to stop there in reading chats. I'm going to unmute the lines, and we're going to open it up for the remaining Q&A because it's kind of hard, I would think, on your side to keep up with that. So I have unmuted the line. If you end up getting lots of background noises and you're not wanting to have us hear what's going on in your world, feel free to mute your line again, and we'll give this a try. If it gets to be too noisy, I'll have you try to raise your hand or something. So who has the next question?
I can ask a question or two if that's all right.
Absolutely.
Okay, first off, I think I have the same question as I believe it was Sal or somebody. If you're an S corporation and you are a owner, you are actually an employee of the company, is what you are. And when we filled out our full-time equivalents, when we made our application, we included ourselves in there. And was that the correct way to do it? Or were we supposed to take ourselves out of the full-time count and out of the money that was paid as an employee of the corporation?
Yeah, so good question. So actually you are an employee as long as you're paying yourself actual payroll, right? So it depends on how you're processing it, but yes, as an owner of the business, you are considered a full-time equivalent, and you can absolutely take an opportunity to take your payroll. That's not a problem. So feel free to pay yourself out of these proceeds, and it is forgivable as long as, again, you're taking it as payroll, not a distribution, not anything else. It needs to be taken as payroll.
Okay, and then one last thing on there is for that payroll period of when it began, and I'll give you a scenario. So then, if your payroll, if you got your funds given to you on the 15th, and your payroll then was on the 18th, and so then now you only have 3 days that they actually worked in that time frame that you got it. Am I hearing it that you can use the 3 days plus the rest of it? Or what you could do is you could go to the following pay period and then use that going forward? Or would you use that first payroll that was paying for funds before you got your loan?
Okay, so yeah, so all three good questions. So the best way for me to explain it is you get to choose which period you do. So you can either choose from the date of disbursement out 8 weeks or from the date of your first payroll out 8 weeks. That's your choice, and you document that on your application. In regard to your other question, so yes, the SBA has indicated if and most of you will have accrued payroll no matter what time you started, you can absolutely run that accrued payroll that hasn't hit within that 8 weeks and include that on your payroll. So you're counting from the point of your start date out 8 weeks, and it's looking at what's accrued and what you've paid. So so you're on the right track there, and it does define that in the application.
And then along with that, just to make sure, so then you can pull money out of your separate account that you guys after the last 8 weeks to go, so you can pay for that final accrual, get everything all straightened up. How long do you have to take the money out of the account after your 8-week period is up.
Oh, definitely. Just won't get.
So if you're not so let's just say, and I think I understand your question. If you're just keeping the money in there just to keep it in there to be safe, and you're using your normal operating cash to fund your payroll, et cetera, that money is yours, whether you use it out of that PPP account or you use it out of your operating cash. But the bottom line is your forgiveness is based on that 8 weeks. So SBA and the bank don't really care how you pay for it, which account you pay for it out of. You just have to prove you did it to get your forgiveness on your loan, which will bring you your principal reduction.
Well, no, I understand that. My question really was so that you'd have this accrued payroll and you paid that 11 days later, and then you figured it out, and could you pay yourself your final pay 15 days after your loan?
I gotcha. Yeah, technically, yes. As long as you can prove that it was accrued during that time, technically you would be okay doing that.
Okay, that's the way you're seeing it right now, is that they would say, well, you didn't take it out, but you still have that accrued. So what you're saying is yes, you'll be able to take that accrued payroll out of there.
Exactly.
Okay,
well,
thank you.
we got our money on the Go ahead. We got our money on the 17th of April. I pay every 2 weeks on Friday, so we got the first.
Oh, I lost somebody. You guys still there?
Oh, it says I'm unmuted.
I have a question.
Hello? I think I'm muted.
No, I can hear you now.
Okay, so my first week in that paycheck was actually the week of April 10th, outside the 8-week period. I just figured I can do 4 payrolls out of 8 weeks, no matter when they start or end, if that's okay. I mean, all my reports will be showing 2 weeks at a time, and it would be a lot of work for me to separate those weeks.
Sure. So you're going to have to, though, that 8 weeks is imperative. So you're going to have to either, it may be worth it for you to pick your covered period as your first payroll, because then you can cover those 8 weeks, those 8 paychecks, or 4 weeks, however you pay it out. But you're going to want to match your payroll to your period. Otherwise, you're gonna be at risk to not have in compliance loan. So you've got to match your payroll to your loan.
Well, the checks were written on the 24th of April. But
right. So your payroll coverage period. Right. So if you wrote the check, your coverage period begins then April 24th and runs out 8 weeks. You can choose to do it that way.
Okay, I guess I'm still confused.
Yeah, and we can definitely take it offline too if you want to talk. But
okay, and I have one more question. What about business insurance? That's one of our biggest expenses, but I don't see that listed as allowable anywhere.
Correct. I also have not seen that. I don't believe that's an allowable expense.
Well, okay, that's sad. Yep, it is.
That would be covered in like the working capital. Yeah, that would be more of an EDL fund for working capital versus the payroll protection program, unfortunately.
Okay.
All right. Who has the next question?
I have a quick question. We had an employee that resigned during this period, but we replaced them. I know when you have an employee that said resigned, you're supposed to have a letter saying that they resigned and or they weren't coming back. Should we have that same type of stuff if we replace them? Because our FTEs should be the same. We filled the position. It's a different person.
Right. If the only reason I think you would count an employee that was let go or left is if you couldn't find a replacement within that timeline. But if you've already replaced them, I wouldn't count both as an FTE. I think you're heading in the right direction there.
Okay, so where we have to put their names down, since our first employee worked for the first portion of it and this new employee worked for the last part of it, do we put them both down, or do I just put the one person down?
No, because you're going to want to be able to be forgiven for the other person's payroll expense. So you're going to put them both down, and then I would just comment that they're basically one equivalent FTE.
Okay, thank you.
Mm-hmm.
I have a question about one of the representation or representative things on the application. This is the one that says does not exceed 8 weeks worth of 2019 compensation for any owner employee or self-employed. That's my question about the owner employee. Are you interpreting that to mean the owner employee of an S corporation? Because then if that's the way it's being interpreted, that would limit their compensation to what they were paid in 2019. It would mean no extra bonus or anything like that.
So I'm just going to, I'll just stop you. So S Corps and LLCs don't fall under sole proprietors and contractors. So sole proprietors, contractors, those are your Schedule C. The other ones have their own tax returns, maybe is a better way to understand the difference. But if you're a subchapter S, whether you own and operate your business or not, you're covered under the non-self-employed rule.
Okay. I do want to just mention, yes, it does. Well, it does and it doesn't because, for instance, the AICPA and the Minnesota Society of CPAs are interpreting that to mean S corporation owners. So, you know, this conflicting information is still very confusing. And if you are going to interpret it as that S corporation employees are not covered by that, that's okay as long as we know that.
Yeah, so I was going to look to see if it's on here, but when you filled out your original application, and I would pull it up, but
it's not for me. It's not.
Sure. So when whoever. Sure. So how are people writing on my screen? I just don't understand this. So when you whoever it was, and we're still here. Don't worry, I didn't lose you guys. I just took you off the share screen. So when you're in, when you originally applied for your loan, or your client applied for the loan, in the top of the application, they marked what they were. If they marked that they were a sole owner, a sole proprietor, they follow those rules. If they marked that they were an S Corp, a C Corp, nonprofit, whatever it was, they follow that set of rules. And it actually is pretty well defined in the rule book, and it breaks it out based on the filings. So if you'd like, I can certainly send you, because there were 2 most recent interim rules that came out that talk about that. I can send those out after this for anyone that's interested in reading it. I'd be happy to share that.
Okay. And I did have one other question. Like the individual who asked if business insurance was a covered expense. What if you used some of your PPP loan to pay your business insurance? That would just be not forgivable, right? It isn't illegal to spend it on business insurance, is it?
So it actually, yes. So you're out of compliance on your loan and you'll be asked to pay it back. Right.
Well,
so
yes,
when
he asked to pay it back.
But not on a loan. At the end of, when we go to ask for forgiveness, if you utilize the funds for anything other than what was approved to utilize the funds for, you're going to have to pay down the loan immediately in that amount.
Oh, immediately.
It's not per amount. Mm-hmm. Yep, it's not an eligible cost. Yeah, no, and you hit it really well in what you stated. There's so many people that are weighing in, and I think that's what's adding to the confusion. And so everyone interprets the rules differently too. And so I always just go back to the interim rules, and I go back to the SBA directly to understand what's real and not real, because we have for months different things around the rules, just like you talked about, and that is not true. I know that for certain. So.
Okay.
I had
thank you.
2 questions.
Okay.
And let me know if you can't hear me. I'm in a car. But the June 30th, just the full-time employee, the safe harbor, for the June 30th count, is that, for example, is that if I pull my payroll report as of June 30th, I have 80 employees on my payroll as of that date. Is that how it's looked at? Is it just how many employees you have on that date? Or is there some
correct,
type of
as of June 30th. Nope.
Okay, so there's not
nope, so as of June 30th. Nope, so that's why they rolled that out, yep.
Oh, perfect. Okay, thank you. And then my second question is, if you were to have, so our benefits sometimes, some of our benefits are paid a month in advance. That's how they're invoiced. If we would have paid 3 months of benefits within that 8-week period, would those funds still be considered forgivable payroll costs, even though some of the days that are being paid for fall outside of those 8 weeks?
Yeah, so that's a good question. The way that I am reading it and the way that we're being told is as long as the bills were due, so when you prove those invoices, as long as they were due during that period, those are eligible. But you have to show that you're not like prepaying costs, right? So it has to be due within that period of your 8 weeks.
So health insurance costs would, sorry.
As long as you have an invoice, as long as you have an invoice due.
Okay.
Okay, so for example, if I know we had, just this is a real life example, we had a May invoice due. It was due on the 1st, but ended up not getting paid until the 12th, just due to some automatic payments not going through. How, in the loan, let's say the loan started on like the 8th or whatever, would that still be considered within that 8 weeks because it was due the 1st but paid late?
So I just want to make sure I understand you. So it came due after your 8 weeks, but it was accrued within? Is that what you're saying?
The May invoice, it was due on May 1st. It covered the whole month of May, but it didn't get paid until May 12th.
If the invoice shows that it's due.
Okay.
Yeah, the key is going back to when was that invoice due. For payroll, they gave that leniency. With non-payroll expenses, it's really looking at invoice, copy of cash check to show that you paid that invoice and it all being due within that period of 8 weeks.
Okay. All right. That's all. Thank you.
Brandi, along that same example, if the invoice was due the 1st and funds were received on the 8th of the month when the PPP clock had started, and it was paid on the 12th, so it was paid within, but it was due 7 days prior to receiving, it would then not be a covered expense, correct?
That's correct, yes. What other questions? I know there's a lot in chat, so we can always go to those if there's anyone that wants to talk.
I have one. So there's not quite 8 weeks that is not the same as 2 months, no matter what, because you got an extra few days that are in there, 5 days on there. But is your understanding what their intent is that you're paying 2 months worth of your rent. You're paying 2 months worth of your other. You're paying 2 months worth of all of the qualified things, and you're not trying to get 3 months out of it. That's
right.
That's what the intent is.
Correct.
Knowing that, due on a certain day, it might not be right within that day, but they don't want you paying 2 times or 3 months worth of 2 months payments. Right. Okay. And that's what it is. Okay. I got it.
Mm-hmm.
Brandi?
Yeah.
Okay, this is Bernie. Here's a question for me. I was one of the early applicants, early receival. And some of these things I have not followed because of the clarification. Been using your check that I got, but now with all this information today, I know that maybe something is not allowable because of the period. And I'll give you an example. I got it on April 13th, and a payroll was due April 15th. But that payroll for April 15th was for March 16th through the 31st. So
that is eligible. Nope, you're good, Bernie. You can pay that. Absolutely. That starts your 8 weeks.
Okay, so even though it was paying for 2 weeks prior before the loan, it's still okay.
Right.
I just asked you, you said I couldn't do that. You said it had to be for the weeks in the 8-week period.
So you're covered. So there's difference between payroll and non-payroll. Okay. So payroll, your coverage period starts and it says that right in the application. We talked about that. So your covered period starts the day that you pay your first payroll. It's not so it's day you pay your first payroll through 8 weeks. So that's your covered period. Non-payroll expenses, you can't go like Chase, the gentleman before, asked that question. If your bill was due on May 1st and you got the money on May 5th, technically, when you show that invoice, it's not going to show that that bill came due during your 8-week period. So just to recap, payroll is 8 weeks from the date of coverage. And when you fill the application out, you're going to specifically pick your 8 weeks. And I apologize if there was confusion, but you're going to specifically pick that 8-week period, and that's what you're going to prove out.
Okay, and then that 8 weeks starts from the day of distribution of the loan, and then
correct.
8 weeks,
or the day you pay that first payroll. So remember, you get 2 options, Bernie. You can either choose the day you got the money for 8 weeks, or the day you paid that first payroll payment out 8 weeks.
Okay, all right, that helps a lot because then you're covering the actual payroll periods then that way.
Right. I'm glad they did that. Yeah, I'm really glad they added that because I do think it makes it cleaner for many of you guys.
Yes, it does, especially twice a month type people.
Yep.
Okay. And if we did utilities and mortgage, I guess I didn't interpret it the way you just described it. So I might have a payment that I wrote out of my PPP check and put it in my other account. And if you do make a mistake like that, how do you guide us? Do you want us to rewrite a check back to PPP out of our main checking account because it's not going to be forgivable after all these clarifications?
Yeah, so it's up to you because my guess would be you probably have another invoice that's coming or that did come that would replace that. And so just keeping track of the non-payroll expenses during that period and the payroll, and then in the end looking at the total amount that's available. So really honing in on that application is going to help you to figure that out. And I wouldn't worry too much until we get into the month of July, knowing that you may already know, but just kind of looking at, okay, during that period, what did I actually spend? What can I prove? And then how much did I borrow? What do I have left? And so that's really going to be that process as you get to the end of this.
And if we have questions on that, just really ask Chase or yourself for specific clarification. Otherwise, I'm doing what you said, which is document. If I spend too much, I figure you'll go well, this will be allowed and this isn't. You're fine, that kind of thing.
Yeah,
I think
you can absolutely utilize us.
Yep, I think you want good faith, right? At that,
yep,
the whole deal.
Agreed.
And that's why Falcon
Agreed.
Bank is the best in the city and the best in Minnesota, because you're looking at us as customers and good faith, and we really want to be those customers with good faith. So I'll work with Chase, definitely. In fact, I saw him send a couple of texts already. So thank you, though. I really love Falcon Bank, and you guys have been very helpful in this whole system, especially for us early guys.
Yeah, thank you. And I swear we didn't plant that, so thank you. Well, all right, what else can we help answer?
Okay, I've got a whoop, I'm sorry.
Oh, go ahead. Nope, you can go ahead, sir.
Okay. Okay, so right away, I'm an early applicant. I went for both the emergency funding the first moment it was available and the PPP. And of course, with that whole emergency funding of the EIDL to start with, the money just kind of appears with no documents or anything. And so it appeared like a day or two before I got my PPP. And then this week, I received my full EIDL. So as I understand it, that emergency thing they gave me is really part of my full EIDL. Is that correct?
Well, actually, I believe they're two different ones. So, and I'm not the expert in EIDL, but I believe that the first amount you got was actually your forgivable, and then your second amount you got was your loan. And
that's
and
a
so
full
look at your
loan.
loan
Yep.
documents. Exactly.
Okay.
So the small grant, I'm going to call it, that you got, that's where it is going to reduce your forgiveness. So you're going to want to net that out.
Okay.
Because you've been given that grant. Yeah.
Well,
good. I'm glad that worked out for you.
Yeah, they did reduce what they said I was approved for. They did reduce it by the amount of that little grant thing at the beginning. So that's where I kind of thought it must be the whole thing. So.
Yeah, and if they did that on the second end, then you may not, because it says in the application the SBA will be the one that will determine that, because we don't know if they've already accounted for it or not, right?
Right.
So, and you don't know that. So the key here is going to be when you go through that process, you're going to signify that you did get an EIDL in your application, and then the SBA in the end will determine if it had already been reduced as the EDL, or if you need to reduce the PPP because you got both of them. So, so they'll assist with that part of it.
And I have to also say, you people have been absolutely wonderful.
Oh, good. Thank you. You have a great team, so I'm thankful. What other questions?
I have a question with respect to seasonal employers, and I'd just like to expand on the previous example where it was April 13th, they got the loan. April 15th was the first payroll, which covered hours prior to April 13th. But then the next week, April 22nd, was for days within there. And it would be better for the client to use later payroll. So can we start at the April 22nd and make that the first day of the alternative covered period and go 8 weeks from there?
Oh, well, I would say that we're flirting a little bit with the gray area. So I'm at this point not going to answer that because I don't honestly know the answer. And I'm happy to write that down, or if you'd email me that specific question, I will get everyone the answer. Because I think it's a great question, especially because they opened that door, and I just really don't know. Because I think there's others like you that would fall into that. And so I will look into that one for you. I don't have an answer on that one.
That's fabulous. Thanks, Brandi. You do a great job. Can you expand on what's included in transportation costs? And then the resources you go to, like the interim rules and to the SBA, I've been following the frequently asked questions that the SBA comes out. But if you could post someplace where those interim rules are, and we could use those as well.
Yep, so I'm just going to write that down. So interim, I can absolutely do that because the big ones just came out this week that really, or late last week, that really allowed us to put this together. And we do have them all available on the Treasury's website, so I can also share that. The other thing I'm looking at real quick here, because I know that your question was answered in the NAGL as far as what is a viable transportation and utility cost. I can get that either by the end, or I'll also email that out, because that was specifically addressed in that PowerPoint presentation, and I can get you guys that so you know exactly what is covered under utilities, and I'm just pulling their slide up here real quick.
Yeah, it's the transportation that could get pretty broad.
For sure, absolutely, yep. And from what I understand from earlier, and this is earlier questions, but at the beginning of the process, that was really tied to if you can prove it's a transportation expense through your business, whether it's car, gas, oil, then it is actually a non-payroll expense. But let me see if I can track that down for you guys, and I'll get that for you too. So,
thanks. Great job.
Yeah, thanks. What other questions do we have?
We have a question about we have employees that are hired through an employment service. So we pay the employment service, and the employment service pays the employee's wages. Is that considered eligible for payroll forgiveness?
It's not, because they're temps, correct? They're not actually.
Well, part-time employees, or part-time for the summer, full-time for the summer, actually, as seasonal workers.
So let me just think out loud here. So you're saying, so are they truly on your payroll, or are you paying? Are they on the payroll? So are they on the payroll of the agency, and then you're just basically paying the agency? Is that right?
Yes. Yes.
And do these people get benefits in addition?
No.
No. Okay, that question I'm going to have to research, because my gut tells me that it would not qualify, but I don't know that answer, because I can also see why it might. So I'm going to research temp agency for you and get those questions answered for sure. So, and I've got utilities and transportation written down too. So, all right.
Thank you.
What other questions? Yeah, you bet.
Brandi, can I use an outside payroll service, KDV, and
absolutely.
With each payroll, you do a pre-process register, tells you how many employees, there's a recap, how much the payroll was, and everything. Is that documentation enough?
Yep, that's completely legitimate. That's perfect.
All right, thank you.
What else do we have?
If your only office is your home office, and that's that way for 15 years, is your interest on your home mortgage eligible?
I am going to write that down, because I don't know that answer. Someone else asked me that earlier too. So let me see if it works. It signifies lease, as you just have to produce a copy of a lease, and you have to produce a copy of proof of payment, right? And so that to me is how you would answer that question, is if you have a lease in place between yourself and your home, which, don't laugh, some do. And so let me ask about that, and I've got that one written down.
Brandi, I looked at the average FTE calculation that they're asking you to do for every employee, and that's taking the average number of hours paid per week and dividing by 40. And so I think wouldn't that say then that if during the covered period that you're comparing it to, if they worked 40 full hours every week, and then now during this period they work 39, it actually dings you because they didn't work the entire 40 hours, correct?
Correct. You're right. And so you'd want to figure out how to adjust for that. So that's where, you know, the goal of this program was, whether they're working or not, like we talked about furloughed employees earlier, we have several businesses that aren't in business right now that are closed, that are paying their employees full time for sitting at home, right? It sounds crazy, but they are, and it's because the government's goal for this program was just that. It really was to help people that are sitting at home because their employer can't open their doors to get paid their full compensation to be at home versus being on unemployment. And so if you need to adjust for that to get your max forgiveness, you have until June 30th or your forgiveness period to do that. So if you have one more payroll left, I'd really look at that and see where you're at so that you can adjust for that.
Except you really can't, because you can't claim anything over 40 hours.
Well, that's not true. You can give bonuses. You can give, there's lots of ways, and the SBA calls that out. What do they call it? Not shelter pay, but I'm sorry, I can't think of the word. But I mean, there are ways outside of, yes, thank you. There are ways outside of just hourly to get your employees back to how they were compensated prior to COVID.
That I understand, but it specifically says the FTE count has to be there.
Well, there's two ways, right? There's hourly. So when you look at the worksheet, it's based on hourly. It's also based on FTE count. So for example, because you said there's not a way. Well, if you look at so it's an average. So, and I'm just thinking out loud here, but let's say you've paid your employees 39 hours and you have one payroll left. Why not pay overtime? You know, I don't know. I'm just looking at it. I mean, you've got to do what you feel is best, but I would utilize this time right now to think about how that might work.
Yeah, that's what I'm trying to do. It just seems like they're looking at both, that they want your average FTE there and they want your salary. So
yeah, and I'd be happy offline if you want to kind of walk through it.
Okay.
You know, we've got to, don't be afraid to reach out. So, because I'm learning a little bit here too along the way. So we'll see if we can figure it out together. All right. What else can I help with?
I have another one. I have another one about the S Corp. Well, actually, it's just a business that has very few of the other non-payroll costs. So in that case, you know, like you have to use at least 75% of the loan if you want to maximize for payroll, and the other 25 for non-payroll. But this particular client has like minimal non-payroll costs. So they can use it all for payroll, even if their owner employee is an S Corp. Is that correct?
As long as 75% of the loan is used for payroll, it is eligible for forgiveness. I guess I'm not sure exactly what your question is, but they can pay themselves in accordance with the rules, right? So up to $100,000 on average per year. They can also include their health care, their, you know, all of those costs that bring you into payroll are all eligible. So
yeah, I mean, and they have retirement, you know, a retirement contribution, but everything else is just payroll or just minimal non-payroll account costs. So it's okay to come up to the 15,000 something, which would be the monthly. Well, anyway, up to the 100,000 annual.
Correct, for cash comp.
Okay.
Yep.
Okay.
We have the warranty plan.
Brandi, just to clarify the FTE calculation, let's say prior to an employee was working 60 hours a week. and now they're working 40 hours a week. That's the only employee. So in the FTE calculation, was she correct when she says we get dinged because we don't count the 50
well, she was saying
hours
the opposite.
one FTE?
Right. No. So here's the thing, so her, in her instance, she's right, because 40 hours is what we consider a full, well, not we, the SBA, I think everyone, I guess, it considers in a full-time equivalent is 40 hours, right? So Mandy, if you're paying on average your people more than 40, you're not going to say you have 1.5 FTEs. You only have 1 FTE. Okay.
Okay,
so
that's clarified. It sounded different. Okay.
Perfect. Yep, it's the opposite of what she was saying. Exactly.
Okay, why would that
Okay. So maybe when we did this application, we just took total hours and divided by and came up with an FTE. So potentially our calculation of the FTE when we applied was incorrect because we counted total hours divided by 40. So is there a way to recalculate that beginning FTE correctly then on this loan forgiveness?
Sure. So Dr. Sherry, we can hear you, just an FYI. And I can't figure out how to mute, so I apologize. So here's the thing. And I said this earlier, my recommendation would be, because I don't think there was enough clarification at the beginning about about what an FTE was, right? There was no guidance on what FTE was. And so my philosophy is, right or wrong, is if I were you, I would demonstrate how you calculated your original application FTE, and then I would calculate the other FTE for the forgiveness based on the same way that you did the original. And then I would just tell the story, right? Help them to understand that originally I stated I had 4 FTEs when in fact I only had 2, but I was paying 2 people 80 hours, so I called it 4 FTEs, not 2, right? So I would try to keep it simple. I would try to be able to tell the story so that when it comes to forgiveness time, you can show that where I said I was going to be is where I am. Therefore, I should be able to maximize my forgiveness and then prove that.
Okay.
So I know this application is extremely lengthy and may be a little intimidating, but I would just take it as it goes. And if it doesn't make sense, that's where I would take a step back and say, well, what am I missing? Did I in fact not hire back enough people or bring in enough hours? And if not, can I adjust for that before the end? Because you guys thankfully still have some time to do that. And then take it from there.
Okay, thank you.
Mm-hmm. Any other questions? Okay, so one of the things that I did do is, and I put it in the Zoom chat, there are still quite a few questions in the Zoom chat, and I know that everyone has been hanging out with me for a lot longer than they probably thought they would. So the commitment that I made was that I will take these questions here that are in the Zoom chat, and I will actually turn it into a Q&A and follow up. And you'll have that no later than Monday, along with the recording and the PowerPoint. My one ask of you is, because I know I overheard, there are still some that have confusion. Now would be a good time to shoot me those questions, okay? So if you have specific questions that are just kind of weighing on you that you really want to ask, email me those questions today or tomorrow, and then over the weekend I'll put together that Q&A so that everyone can see that Q&A, because that should give everyone enough time or me enough time to get answers back from our trusted resources on those other questions that I have written down. So I just took a copy of all of the questions that are in our chat, except one because it just got added, so I'm going to copy and paste that. And I'm going to take all of those questions, and I will turn them into a Q&A, and you'll receive all of that, including the recording and the PowerPoint on Monday. And again, you know, this to me is much different than when we first started together, because when we first started together, there was that rush to get that loan number. Now we have time, and someone said it earlier, we have 5 months. Right? I mean, not really, but we do. There actually is not anywhere in here at this point a deadline for you to apply for forgiveness. And that's where somebody asked the question earlier, well, what if I don't apply for forgiveness? Will it just turn into a loan? I don't have that answer for you right now because it hasn't been stated that the borrower has to apply for forgiveness. It's not mandatory today. So that is something that we expect to hear about within the next week to 2 weeks, is that final ruling, and it'll say final ruling on it, so we know that no longer are there any questions. So now is our time to start digging up those questions for you to think about the process. We wanted to get this in front of you because I started getting lots of emails asking me about the process. So this is our way of getting out in front of it on trying to help ease some of those questions. Please take time. Feel free to email me. My email, in case you don't have it, is bnelson, N-E-L-S-O-N, @falconnational.com. If you have a lender you're working with, you're welcome to obviously email any of them, and we'll get you those questions. But if you want it to be included in that Q&A for Monday, please send me those questions to my email, bnelson@falconnational.com, or as some of you are, keep bumping them into this group chat. And then otherwise, we want to thank you for choosing Falcon National Bank. We were so happy to help all of you, and we truly do look forward to helping you get through the forgiveness phase. We're going to have a team dedicated to just that. That's what they're going to do full time, and we're working through building that team right now. And so more information will come in regards to who's on that team, who your trusted resources are, and we're going to have a lot of clarity by the end of June. So I'm sure we'll have one more webinar by the time we get through all of this and get the final ruling. But in the meantime, we're here to help, and I wish you guys all the very best. So thank you again for your time and for being a customer of Falcon National Bank.
Thank you.
All right, I'm sorry. Let me